Nobody thought a single Roblox player could become associated with billions of dollars in market movement. At first, it looked completely ordinary. A permanent ban notification, no warning, no build-up, just the standard message every player dreads: your account has been terminated for violating our terms of use. That message appears thousands of times a day across Roblox. Most of those bans disappear quietly. No one talks about them, no one tracks them, no one writes articles about them. But this one didn't disappear. Because this wasn't just another account. This was a trader. A high-volume operator inside Roblox's limited item economy. If you've never been inside that side of Roblox, you wouldn't understand how serious that is. Limited items aren't just cosmetic hats. They're assets. They fluctuate in price. They are bought low and sold high. Entire Discord servers track them like stocks. There are price histories, graphs, trend predictions, sniping bots, trading rings. This player was deeply embedded in that ecosystem. He wasn't just collecting items. He was controlling significant supply of specific limiteds. When you control supply in a thin digital market, you influence pricing, and when that supply vanishes overnight, markets react. The moment his account was terminated, something subtle but measurable happened. Items he heavily held started dropping. At first, people thought it was coincidence. Then they checked inventory trackers. Then they realized something bigger. A massive wallet just disappeared. Millions in estimated item valuation, gone from circulation instantly. And that's when panic started. Because digital economies rely on liquidity. If you remove liquidity suddenly, volatility increases. And volatility spreads fear. Within hours, trading servers lit up. People were asking, was he exploiting? Was this manipulation? Did Roblox just freeze high-value assets without warning? Then someone calculated the peak valuation of his frozen inventory. Based on historical high prices, the total was estimated at over $1.6 million. Whether that number was inflated didn't matter. The headline wrote itself. 1.6 million erased. Now imagine you're a trader inside Roblox. You've spent years building your portfolio. Thousands of trades. Months of timing entries and exits. And then you see that. One ban. 7 figures frozen. No liquidation window. No exit. No warning. Just termination. Confidence doesn't collapse all at once. It fractures, and fractures spread. Some traders started liquidating. Others paused activity. Speculative buying slowed. High-value trades dropped in volume. When volume drops, revenue tied to transactions drops. And that's where the impact begins expanding beyond one account. Because Roblox earns from ecosystem activity, microtransactions, premium subscriptions, developer exchange programs, marketplace flows. When fear enters a market, spending behavior changes. It doesn't need to collapse completely, it just needs to slow. Even a small percentage drop across millions of users translates into enormous numbers. But the story didn't stay inside Roblox, it escaped. Commentary channels picked it up, not just gaming channels, financial channels, digital economy commentators. People started asking bigger questions. Who actually owns digital items? If you buy something inside Roblox, do you own it? Or are you licensing access? If Roblox can freeze high-value assets instantly, what protection exists? These questions weren't new, but now they had a face, a case, a number, $1.6 million. And that's when something more dangerous happened. The narrative shifted from internal drama to platform risk. Roblox is publicly traded. When headlines start connecting asset seizure and multi-million-dollar loss to a publicly traded company, investors notice. Now let's clarify something important. No single player directly erases billions from a corporation's bank account, but markets move on perception. During the period this controversy spread, Roblox experienced significant market volatility. Billions in market cap shifted across short windows. Some of that movement was broader tech trends, some of it was market conditions, but perception compounds existing instability. When confidence weakens, even slightly, the effect multiplies. Because investors price risk, and public controversy increases perceived risk. Suddenly the narrative wasn't, why was he banned? It was, is Roblox's digital economy stable? Could regulatory scrutiny increase? Are digital asset disputes becoming legal risks? That's where this escalates beyond gaming. Digital economies inside platforms are starting to resemble financial markets. Artificial scarcity, speculative flipping, high-value trading. And when large accounts vanish overnight, it resembles asset seizure. Even if legally justified, that perception matters. Then the legal escalation began. The banned player claimed wrongful enforcement. Claims surfaced that enforcement timing caused disproportionate financial harm, that freezing assets without structured appeal mechanisms destroyed business operations tied to the account. Whether those claims succeed legally is secondary, because once legal documents are filed, the controversy becomes permanent record. Now journalists have material. Now analysts have language. Now commentators have narrative fuel. And narrative fuel drives volatility. The conversation expanded again, from 1.6 billion in frozen items, to billions in stock valuation fluctuations during controversy windows, and that's how the number ballooned. How one player caused Roblox to lose $12 billion, not through theft, not through hacking the company, but through triggering a chain reaction that amplified market instability. Because here's how it actually works. Confidence drops inside the player economy. That reduces activity. Reduced activity affects revenue expectations. Revenue expectation shifts influence stock valuation. Stock valuation shifts can equal billions in market cap movement, even if temporarily. And in financial headlines, temporary doesn't matter. Movement matters. The moment billions fluctuate, the story becomes bigger than the original event. One ban triggered: trader panic, marketplace instability, media amplification, investor scrutiny, legal escalation, and public debate about digital ownership. That's a chain reaction, and chain reactions are what markets respond to. Now zoom out. Roblox's entire platform is built on centralized authority. They control access, they control enforcement, they control policy, but users generate value. When those two realities collide publicly, tension appears, because digital items feel real to the people holding them. Time was invested, money was spent, portfolios were built. When access disappears instantly, it feels like confiscation, even if terms of service allow it. That tension is the dangerous part. Because as digital economies grow, legal frameworks eventually follow. And when regulators begin examining platform-controlled economies with real financial impact, the rules change. This incident forced uncomfortable questions. Should there be clearer appeal systems? Should large digital asset holders have structured dispute processes? Should transparency around high-value bans increase? Those questions don't vanish. They linger. And lingering uncertainty affects valuation. That's how one player becomes associated with a multi-billion-dollar narrative, not because he directly drained funds, but because he exposed fragility. Markets don't just react to loss, they react to risk, and this incident introduced risk perception at scale. Eventually, volatility stabilized, the headlines cooled down, Roblox continued operating, revenue normalized, stock movement stabilized, but something changed permanently. Traders inside the platform became more cautious. Large holders diversified. Conversations around digital ownership intensified. The myth that digital assets inside games are just cosmetic weakened, because when seven-figure valuations get frozen overnight, nobody calls that cosmetic anymore. That's economic. And when economics intersects with centralized control, conflict is inevitable. One account, one ban, one valuation headline, and billions in market cap movement tied to perception shock. That's how this story escalated. Not through destruction, but through instability. And in financial systems, instability is expensive. If you want more deep breakdowns of how digital economies collide with real-world markets, subscribe, because this won't be the last time a virtual asset controversy shakes something much bigger.